today on Nifty-50 laggards, which have seen a fall of 1 to 5% in the same period, while the Nifty has risen about 13%, which is from April 17 to today. Just to highlight, April 7th, by the way, is also the year's lowest level for the Nifty. Somit joins in with this interesting juxtaposition of two different trends. Somit.
Well, yes, if you look at the year-to-date low for Nifty-50, it was on April 7th, and since then we have seen a steady rise when it comes to the benchmark. It has risen nearly 13%, but there are only 5 stocks in the index which have actually underperformed massively when it comes to the benchmark. Now, if you look at those 5 stocks that have underperformed, it's NTPC firstly, which has fallen the most, around down 5%, TCS down 4% since April 7 till now, Sun Pharma, it's down 3%, Kotak Mahindra Bank again down 3%, and Power Grid, which is down 1%. So at this point of time, what we are trying to do is we are trying to see whether is there an upside, or can these underperformers actually turn into outperformers for the rest of the financial year and going forward. So firstly, highlighting NTPC. Now if you look at the buy call, nearly 89% of the analysts tracking this company have a buy call, while the return potential based on the consensus target price is nearly 26%. So what are the key bullish points for NTPC? Firstly, they're expecting a power demand growth to come in. There's a low base for October, which will also help. Then there is a significant part of the planned capex till 2032 is under regulated tariff mechanism. Now this highlights the kind of revenue growth visibility that will come in for NTPC going forward. Apart from that, the company is also expanding into new avenues such as green hydrogen and its derivatives, green energy storage, and nuclear energy as well. Now, when it comes to Sun Pharma, if you look at the percentage of buy call, the 80% of the analysts tracking the company have a buy call. The return potential is 19%. And what are the key trigger points for the company here? Firstly, they are seeing a double-digit growth in the domestic formulation business. Now, this segment contributes nearly 1/3 to the top line and nearly 55% of the company's EBITDA. Apart from that, they're expecting a sustained focus on the innovation products, and they're also saying that the concern on the specialty ramp-up is now overdone, so that will not be a concern going forward for Sun Pharma. The third stock on the list is TCS. Now, if you look at the buy call, it's 65% of the analysts tracking the company have a buy rating, 17% is the return potential. Now, what analysts are saying at this moment for TCS is the fact that the growth expectations have bottomed out, and going forward, they're expecting some boost in the second half of this calendar year. Apart from that, they're also saying that margin recovery will remain in focus. In fact, the 24 to 26% aspirational band that TCS had given for themselves, that is very much achievable as per analysts. And also, the free cash flow that the company generates. Now, this can come back to shareholders either in form of a buyback that we saw recently from Infosys, or either in form of special dividends that the company could give. But the key risk for TCS is AI. And today, Jefferies reports clearly mentioned that 20% revenue deflation is what they're seeing in the IT services over CY25 to CY30, with higher impact on high margin revenue businesses. So that is the key concern coming in for TCS currently. Now, if you look at Kotak Mahindra Bank, nearly 61% of the analysts have a buy rating. The return potential in 70 is 17%. And what are the key trigger points here? They're expecting a healthy growth coming in, the healthy growth outlook coming in for Kotak Mahindra Bank going forward. They're also saying that the margin and credit pressures are expected to ease going forward. Then there is the MFI trend, which is also suggesting some improvement from the current levels. But the key risk here is that growth recovery could take time for Kotak Mahindra Bank on the flip side. And lastly, when it comes to Power Grid, now here 67% of the analysts have a buy rating, while the return potential is just 12%. The key bullish points coming in for Power Grid at this moment is that the project wins have been quite healthy. The company's dividend yield are healthy, but there could be a weak earnings growth going forward. Not much, a single-digit earnings growth is what analysts are expecting from Power Grid, and execution challenge is the biggest risk when it comes to Power Grid.
Okay, so those are some names, and thank you, Somit, very, very valuable for bringing out some of those.